Polina, how are you? John, how are you? Life is good.
Fantastic.
Amazing. You good, John?
I'm great.
You're good? I just double and triple checking. Oh, look, there you go. Ooh. Ooh. All right, Polina, go ahead.
I just want to say something to the people. Hello, you cool cats and kittens. Okay.
All right, let's go to the inflation.
All right. So Janet Yellen, the U.S. Treasury Secretary, has warned that inflation in the U.S. is, quote, unacceptably high, and said bringing down rising prices will be Washington's top priority. Well, I mean, she's just stating the obvious. What do you guys think?
John?
Shouldn't this have been their top priority 6 months ago when everyone knew this was coming?
Or 12 months ago.
Or 12 months ago? Or 18 months ago when they printed the money?
Months.
Yeah, right? I think we all knew this was coming, right?
Yeah, one, we knew it all was coming. But the other pieces that she said in her speech was she said it's unacceptably high. Agreed. So great, now that we're admitting that. They've previously said it's not transitory after they thought it was transitory. Okay, great. She claims correctly that the labor market is tight. What that basically means is unemployment right now is like 3.5, 3.6%, near a historic low. Before the pandemic, it was 3.4%. So that's good because that means that we've recovered all of the jobs that we lost during the pandemic, which is a pretty incredible feat. So you get credit for getting the labor market back. But she also claims in the same speech that the United States is releasing tons of oil from their strategic reserves as a way to essentially flood the market. And also they're trying to put price controls on Russian oil so that they can get energy prices down. As we know, gasoline in the United States is up 60% over the last 12 months. Some of that is loose monetary policy, some of that supply chain disruptions, and some of that is geopolitical conflict. But at the end of the day, they can say inflation is high. They can say food is too high. They can say gas is too high. They can say this is what we're doing, A, B, and C. They can lay out all the plans. They can do the speeches, all that. The average person only knows when they go to the grocery store, shit is more expensive, and that's a problem.
I have one question and one comment.
Go ahead.
Question. Do we think inflation can get higher?
Well, it definitely could go higher.
Do
I think it's going to go higher? It's a great question because what we're already seeing is, one, core inflation has started to come down a little bit. So you take out the food and the energy. So that is a positive sign, and they will point to and say, oh, look, inflation is going to come down. The second thing is we've also seen gasoline prices start to fall over the last month. So if that is a major contributor, that would be good. And the third thing that works in their favor is they're willing to change the basket of goods. They're willing to switch up how they calculate it. And so even if inflation actually on a real basis gets higher, they can always keep it under that 10%. I think that 10% is a psychological barrier.
Yeah.
If similar to taxes, once your tax rate goes over 50%, people are like, oh, hold on, man, this feels
over 50% is I'm working for the government.
Yeah, like right now, like literally, if your tax rate is over 50%, you've been working for yourself for 14 days this year because you worked for them up until June 30th, and now you're working for yourself. Right. So when you think about kind of 10% inflation, high inflation, the difference between 8.5 and 9.1, I don't think many people it's high. Once you cross over 10, psychological barrier, but whoa, which they probably should have done like 5%. But I do think 10 is just because double digits is a big issue.
Eventually it will come back down, right? Because it just can't continuously increase like that many times over and over, like year over year, right?
Correct. It's compounding right now.
I can't wait for them to start claiming victory.
Well, if you really think about what's going on here, is last June 2021, inflation was 5.4%. So if you went to sleep in June of 2020 and woke up June of 2021, kind of like opened your eyes and said, what's going on? You're like, damn, prices are 5.4% higher. But then if you fell back asleep and you woke up this past June of 2022 and looked around, you're like, damn, prices are 9.1% higher than they were last June. But if you start to compound this, that means that goods in June of 2020 to June of 2022 are up double digits. That is what we're now experiencing, is the 9.1% is on top of the 5.4% from last year. So now you're going to get in a situation where at what point do they get it back down to 2%? Next year, they could get inflation down and it could be 5% next June. And if that was the case, you'd say from 2020 to 2021, 5.4, 2021 to 2022, 9.1, and then 2022 to 2023, 5%. That would be a nightmare.
They're going to claim victory the second that the number goes down. If it goes from 8.1 to 8, They're going to claim victory.
They definitely are going to claim victory when it goes below 8%. That's the threshold. 8%. They're like, oh, we're winning. What's the next thing?
Wait, my comment.
Oh, go ahead.
What
Go
is
ahead.
this? My comment was, I was watching the speech of Janet Yellen. I was like, why are there palm trees behind her? Like, where the hell is she? And apparently, there's a finance ministers meeting in Bali. Interesting that they do it.
There's a lot of conferences there.
Really?
Yeah, I mean,
Yeah, fun fact.
interesting.
See? That's a palm tree. Okay, I bet you it's really hot. Okay, so JP Morgan Chase said that second quarter profit slumped as the bank built reserves for bad loans by 428 million and suspended share buybacks. But what I thought was interesting here is Jamie Dimon said that the U.S. economy continues to grow and both the job market and consumer spending remain healthy. But he said, geopolitical tension, high inflation, waning consumer confidence, the uncertainty about how high rates have to go, and the never-before-seen quantitative tightening and their effects on global liquidity, combined with the war in Ukraine and its harmful effect on global energy and food prices, are very likely to have negative consequences on the global economy sometime down the road. There are so many problems in the world right now. Like, that was a word salad of a sentence, he said.
People love to point at bank CEOs and yell and scream like they're idiots, they're stupid, they're not doing this, whatever, especially in the Bitcoin and crypto world where like, oh, they don't understand technology. I've done it. Everyone's done it. They're like easy targets for the memeing on the internet. But they have immense amounts of data. They have huge research teams and analysts that they can rely on. And what he said there is probably one of the most coherent analysis of what is happening in the world, which is there are a number of data points, which we've now seen Treasury Secretary Yellen, we've seen Jamie Dimon, a number of others point to. Employment. We still have a pretty strong labor market. Now, it could get worse, but right now it's pretty strong. But there are also problems in the world. And things like the geopolitics, the quantitative easing, quantitative tightening, like all these different things, even simple things like they're raising interest rates when the economy contracted in Q1. When did we ever see this happen before? Is this more like a 1980s scenario? Is this more like a 1970s? Is this more like Japan? Or is this more like some past time in America? There's all these folks trying to figure it out. And what you can really summarize it all on is the economy is a very, very complex machine. And no one can predict it. Mm-hmm. No one. What do you think, John?
Yeah. I mean, he hit it on the head, right? Like, you have to understand this stuff. Like, these are very intelligent individuals, but they're taking an educated guess, right? The economy, as you stated, is very complex and it's very unpredictable. As we've seen the last 2 years, you just never know what's going to happen. So it's hard to just stamp it and say, we're going with this plan. We're never going to change it. This is how we're thinking. As people know, things evolve over time, right? He's just changing his opinion on what he thinks will happen in the future. And he's leading an organization that matters a lot, right? The loan stuff, to me, keeping money in for bad loans is don't make bad loans. Loan to good creditors, right? People now have higher credit scores than ever when they're borrowing money.
Well, so, and this is very nuanced, and I'm going to make some generalizations here, but to help people understand, when banks make loans, they, in their models, account for, we're going to lose money on a couple of loans. They build a portfolio of loans. Hey, something goes wrong with this one. We have 10 others that make up for it, right? It's no different than venture capital or anything else where a portfolio provides you protection from ones that could go wrong. And the whole key is risk management. And so when you head towards bad times, remember during COVID, more and more businesses failed than normal. There was a spike in that. Polina is yawning because she's like, "Oh my God, this is so detailed."
This is The Big Short. What are those things called? With things, the stacks. You know, the
Jenga.
No.
Candlesticks.
But you're talking about like the bad loans, but I'm talking about the bad mortgages in with the good ones. What are they called?
CDSs.
Yes.
So the whole idea is that you basically end up having these loan books, and when you go into bad times, more loans than normal will be defaults or things will go wrong. And so they have to account for that, have to prepare for it. So what do? They say, hey, maybe we should put more cash on our balance sheet, have a stronger balance sheet. Then on top of that, they also are not doing share buybacks. They're pausing it. Share buybacks, which lots of people love to hate on, is a tax efficient way to return capital back to shareholders. Instead of doing a dividend, you do a share buyback. It pushes the stock up. There are bad incentives that go along with that. But why are they pausing share buybacks? So they have more cash. They're holding their cash on their balance sheet and they're saying, we don't know what's going to happen. strong balance sheet, get cash flow up as high as we can, be prepared for good times or bad times, but go. They're almost like saying like we're going into battle. And if you go into battle, what do? You just rally the troops. Their troops are dollars. That's what they're doing. All right, what's up with rent?
All right. The average monthly rent for a Manhattan apartment surpassed $5,000 for the first time ever. That's the highest ever it's been. And that's the average rent. Right? Like
John, you good?
I thought I was getting screwed in Miami. $5K for rent to live in a shoebox in Manhattan.
That's just not sustainable.
Yeah.
But they're saying that it could go even higher in the fall. They expect.
Well, of course.
Well, right now is the time that people are moving in, right? This is traditionally people graduate from colleges or schools or whatever, and the summer is that transition time where people get new leases and
But how
rents
are they
go up.
affording
That's why the average is
$5,000?
going to keep going up, is
But
because
how
you're
are
going to
those
get
people
the
affording-
June, July, and August prints.
All those aspiring actors, journalists, writers, how are they affording $5,000 rent?
They're
Are
not.
they sharing it with like 7 other people?
No, they're not.
What do you mean?
That's why Brooklyn's so popular.
No, but
Hoboken.
No.
Hoboken. Yeah,
No,
I mean, like
it's not any cheaper, trust me.
It's pushing out. Well, it's definitely cheaper. It's not more affordable. Again, this is real shit, right? What we are watching is a whole bunch of different cities. Real estate prices, rents are going up, and wages are not growing at the same rate.
Wait, this is really funny. Somebody said at the end, a broker at Sirhan said at the end of the day, they want to be in New York. Even some of the families that went to Miami are coming back.
Of course, some people are going to go back, 100%. But also, there's a lot of people who are graduating college, to John's point, and they're looking around the country and they're saying to themselves, where should I move? And guess what? They're not moving to New York. They're not moving to Miami. They're not moving to Austin. They're not moving to San Francisco. And they're not moving to LA. They're going to places like Nashville. And they're saying to themselves, oh, I heard Nashville's got parties. I heard it's cheap. And I heard there's a couple of tech companies where I could work remote. And so that's what's going to play out here now is people are starting to make decisions based on affordability. And what you're likely to see is that there's plenty of people in New York City, specifically in Manhattan, that will say to themselves, I'm not going to live in Manhattan. I'm instead going to go to Brooklyn. I'm going to go to Park Slope. I'm going to go to Hoboken. I'm going to go somewhere outside. I'm going to go to Rochester. I'm going to go live on Long Island, right?
Thank you for your knowledge.
And I'm going to get a way to get into the city, but I'm not actually going to live in the city because the average rent's $5,000 a month.
But do we think, yes, it's an influx of people moving back, but do we think that inflation also plays a part?
This is all inflation, in my opinion. What changed in New York City
Literally more rats.
real estate? No, what changed in New York City real
Politics.
estate in the last 2 years? Politics? Well, I would argue that more people want to leave, which should bring the prices down.
Yeah.
Right? Because of the politics. And then you say crime and all, like you layer it all in. New York is probably less quality of living right now than it was 3 years ago before the pandemic. And so in that case, if it's less quality of living, less people should want to work there or live there and work there. And if there's less people that want to live and work there and less companies are requiring you to live there, then that means there's less demand. If there's less demand, that means the prices should be lower.
But
instead, they're higher.
But there is not less demand. I think that's
The demand will always be there for
Yeah.
New York City.
There's
we
bidding
just saw a
wars on
pandemic where
rentals.
there was a million reasons to move out of the city or live out
people
elsewhere,
moved.
and people did, but now they're flooding back for a region because those
I don't
reasons
think they're
are
flooding
ending.
back.
But I don't think it's the same people. I think it's young people, like
Of course.
John mentioned.
Of course. But those young people don't have the spending power that the older people have. And what you're going to see is that, yes, young people will move there. Look, if I was 22 years old and I was graduating college, right, and I just graduated, and you said, where should you move? New York would probably be top of the list. You know why? It's a cool-ass city. You can go party your face off with all your friends. There's lots of job opportunities. You can do all this stuff. But when somebody calls me up and they're 40 years old and they're like, I got a family, what should I do? New York isn't even on the list.
Yeah.
Because they have different considerations. And so naturally what you're seeing is, yes, there is some demand, but the demand for New York real estate has, from the last numbers I saw, have not reached pre-pandemic levels. There's still less demand. It's monetary policy that's driving this, and people are having to get out of cash and get into hard assets.
It says bidding wars are now routine for rentals. 1 bedrooms are going for $6,000.
I've seen videos of lines, middle of the day, open houses that stretch down the block.
You can tell me all the anecdotes you want in the
No,
world.
no, no.
I just look at the data. The data says that we are not, as of 2 months ago, unless something changed in the last 2 months, we were not at the pre-pandemic levels in terms of demand.
Yeah, we'll see. Okay,
All right,
ready?
let's do it.
So this is very interesting. Twitter is testing custom timelines, and the first one is about The Bachelorette. It's a new feature that will show users custom timelines built by developers that will merge tweets and other media around specific themes or interests based on, the content they pull from accounts and hashtags and stuff. And so they're testing it with The Bachelorette, and I'm guessing they're doing that because The Bachelorette is a live event that you watch every Monday at 8 p.m. and people like to tweet about it as they watch. So I think this is a perfect use case. What do you think?
John, what do you think?
Everyone's going to have this eventually. Every social media platform will implement some version of this, right, to give you a personalized experience to where you can see news in the manner that you want, whether that's the way you want it or the way they perceive that you want it. You're going to get that headline, right? They may have a toggle option to turn it off and on or whatever it may be, but everyone's going to have this eventually.
I think it's a great idea because you know how right now on Twitter there's a news section on the right, and whenever I watch The Bachelorette, I click on that and I see what people are saying. But I guess this is just it'll automatically populate if it knows that those are my interests every Monday.
They're already tracking you across everything.
I'm sure they're tracking me.
I don't know how I feel about this.
Why?
Personalized headlines,
Or timelines?
timelines.
I mean, I see the value of it, but also at the same time, the source material.
Dude, but your timeline's already sourced right now.
Yeah.
You can make it reverse chronological.
Can you?
Yeah, you can go and you can change it.
No, not
No.
chronologically. I'm saying the tweets that are pulled in for me are different than the tweets that are pulled in for you based on followers, likes. They have an algorithm.
That's what I'm saying is you can remove that. You can go and you can switch it, and
Oh,
then,
really?
and then you can make it reverse chronological. So when you're on there, Twitter says we're not going to tell you which one's at the top, which one's at the bottom. It's just what's the last tweet
but-
from somebody you follow.
Anthony, I've seen you follow hashtags or when you watch a sporting event, you want to see what people are saying.
Oh, I will go look at
Right.
them sometimes, but it's usually not because I'm trying to augment the experience. It's because something happened, right? I know there's a thing, or I saw it trending, or whatever.
But isn't this easier instead of you trying to search on Twitter?
Dude, I like stuff on
I don't watch TV,
Instagram and
really.
Twitter and all these places just to have more things that are similar come in my feed. Sometimes
fair.
I don't even like it, and I'm I like the idea, and I want to bring it into my feed.
What is space debris? Only because we
Okay.
got a little, we gotta get moving here.
All right.
You guys see me here?
All right.
Got deadlines.
This study published in Nature Astronomy on Monday says that there's a 10% chance rocket debris will kill somebody on Earth this decade. That's scary.
I mean,
10%.
I would love to know how they
psychological
come
barrier.
up. How they come up with 10%.
Because they did
probability?
them-
Math.
No.
30 years. They used more than 30 years of data from a public satellite catalog to calculate the potential risk that uncontrolled rocket body re-entries have on human life in the next 10 years. 10% is a psychological barrier. Now I'm scared.
But it's from rockets. It's not actual space debris.
No, rocket debris.
Yeah,
No,
that's
but-
what I'm saying. It's from humans sent it up and then coming
Right,
down, it would hurt
right,
somebody,
yes.
which is very different than an asteroid's going to hit her.
Yeah,
Right.
that's the biggest scary thing is we're the ones that put that stuff into space, and it's
Correct.
going to hurt people, not that it's just natural.
Yeah.
Yeah, it makes sense.
We
As-
put cars on the road, they hurt people.
Well, as we launch more rockets and
Yeah,
things
of course,
into
of course.
space.
You would hope it would become safer, but unlikely.
God, I really hope that I'm not the one unlucky.
Do you have any last words for the people?
Be kind to your friends. Throwback.